Hello, everyone, and thank you very much for joining us for this session. The Shell Game, Hiding in Plain Sight. Very much enjoyed the previous session with the talk from Shay at Refinitiv. We've got about 40 minutes to discuss some key issues here around one of the central parts, or central concerns that's on the agenda at the moment in the anti-financial crime world, which is the role that shell companies potentially play in financial crime and a wide range of other questionable activities. Of course, contextually, shell companies are something that are not necessarily illegitimate, and they have an economic and financial purpose, but at the same time, they are quite clearly vulnerable, given the limited requirements in many cases, in many jurisdictions that are required to set them up. And there's a lot of potential risks there that we need to discuss. So in this session today, I want to talk a little bit about what those risks are, consider what we're actually trying to do to mitigate those risks, and look forward into the future and ask some further questions about what more can we do to mitigate the risks around shell companies. So to have this discussion, I'm very lucky to be joined by three distinguished panelists, and I will introduce them before we go into the discussion. So first up is in our panel of experts is Rashmi Dubier, who is the Managing Director and APAC Head of AML at MUFG. Rashmi is a seasoned AML professional and practitioner with over 15 years of experience building and managing complex AML compliance programs at large global banks, including Citibank and JP Morgan Chase. So welcome, Rashmi. Also joining us is Helena Wood, who is a financial crime consultant and associate fellow at the Centre for Financial Crime and Security Studies at RUSI, of which I am also an associate fellow, as well as being managing director at FINTRAIL. Helena's research is a focus on the efficacy of the UK anti-money laundering regime, including work on beneficial ownership transparency, which is obviously a key issue around shell companies. So welcome, Helena.
Thanks, Matthew.
And finally, and not in the least, we have Mark Nuttall, who is the Singapore country manager at Hill and Associates. And Mark was formerly a detective at New Scotland Yard and spent several years at Interpol in specialised intelligence and investigations role. And in his current role at Hill and Associates, he oversees Singapore operations with a focus on risk assessment and management, fraud prevention, and cyber security. So welcome to Mark. Before we get into the questions, I want to give each of the panelists an opportunity to kind of give a bit of an overview, what they see the key issues being around shell companies at the moment. And the questions in my head, as a sort of form of guidance here, is, what do we really mean by a shell company? Why do we think they're a problem? And why is it an issue now? So let's go to Rashmi first.
Thanks, Mark, and good afternoon, everyone. First of all, my thanks to Regulation Issue for having me as part of this panel, and very, very pleased to be part of this group of esteemed panelists. So to be able to effectively mitigate any risk, you should first have a very clear definition of what the risk is. And this may seem like a very obvious thing, but I've seen even large financial institutions trip up on something as basic as this. Especially when it comes to shell companies, right? When we say shell company, it means a different, it means different things to different people. Are we talking about front companies? Are we talking about non-operating holding companies? Are we talking about shelf companies or offshore companies? It's just so many of these terms in the mix. And this is not clearly defined even in any of the regulations that we have in APAC. The regulatory literature also tends to use the term shell companies and to mean different things in different publications. There's definitely a lack of consistency. And so my preferred definition, and the clearest one that I've seen till date, is from a 2018 joint report by the FATF and the Egmont Group on the concealment of beneficial ownership. And this report defines a shell company as an incorporated company with no independent operations, no business activities, no employees, no independent assets, pretty much a company that doesn't have any clear purpose. Now, this is still a pretty broad definition. It's important for each firm to then clearly identify a subset of companies that meet this definition that are relevant for financial crimes purposes. And it's really important to narrow this down because the clearer you define what your problem is, the more focused you can be in how you deploy your resources. So you don't end up applying a broad brush approach to your due diligence where your first line businesses end up treating Coca-Cola parent holding corporation the same as a paper company that's set up to hide criminal activities. And that does happen. I've definitely seen that happening where you have a one-size-fits-all approach, and you're surprised at the sort of companies that we're putting through the same set of controls. So it's that definition and ring fencing of the risk is really important.
That makes a lot of sense. I mean, very often we don't go back to first principles and say, what are we actually talking about? There are lots of terminology in anti-financial crime, I think, which floats around, and we were hearing about term effectiveness in the previous session, which means all things to all people, it seems. So if we're going to manage the risk around shell companies, we've got to say exactly what we mean by that. So I'll move on, thank you, Rashmi, to Helena. Sort of what do you take from what Rashmi said, and what's your perspective?
Yeah, I utterly agree with Rashmi. There's some semantics going on here, but I think if we strip the term back, for me, what is a shell company? It's something that doesn't really make sense in the real world. And I think that's a really basic rule of thumb for me, where either it doesn't have any real world activity, or where, that location, ownership structure, or the activities just simply don't make any sense. That's again, a good rule of thumb for spotting a shell company. Why is it owned in the way it is? I mean, there are some, as you say, Matt, some legitimate reasons for structuring companies in that way. But as a good rule of thumb, if it doesn't make sense in the real world and it smells a bit off, then suspect it may be a shell company. And to your point, Matt, about why is this a problem now? Well, in any of these global laundromats which keep popping up with worrying frequency, at their heart, the biggest tool used by those financial criminals are shell companies and networks of them across multiple jurisdictions. They keep popping up with frequency, and sadly, from my perspective, they're often British ones, which will point to a point in transparency of corporate registries. But for me, they're really a problem in the real world right now.
That makes perfect sense. And Mark, over to you.
Matthew, thank you very much. I would say that it's one of the very few corporate entities that can have its corporate veil pierced. It's the one that acts as a vehicle for criminality, for money laundering, for the execution of fraud. When you're talking about legal shell companies that sit there for a legitimate purpose to resale as a shell stroke shelf company, that's a different beast. But the majority of them that I would term to be shell have the applicability to have that corporate veil pierced, and that is a very, very rare occurrence within the legitimate side of the corporate sector.
Why do you think that this is becoming such an issue at the moment on the international stage, Mark?
Mostly because it's now published. And there are a lot of entities that are talking about it. This has been going on for years, since the invention of corporate entities, the separation between person and made up thing, because that's what they are. They're made up to ensure that an individual has that limited liability on them. And obviously we've got very complex structures now with multinational corporations, but a lot of multinational corporations, legitimate ones, use very complex structures involving both shell and pre-purchasable shelf companies. So on that basis, for me, it's quite clear as a previous criminal investigator and somebody that runs a private investigation company now, that it's about doing that piercing act. If you can pierce the corporate veil, if you've got that above suspicion grounding to be able to say this isn't right, then that's what stands out to me as a shell company that has a criminal use to it.
That makes sense. I'd like to now get into a little bit of detail about how we actually see those kinds of shell companies being abused, and we hear a lot about there's lots of regulatory notices, international standard setters, and I know actually I think in Singapore, MAS recently put out some advice on high risk shell companies. So let's get into a bit more detail. And I know, Helena, you've done a lot of work at RUSI on transparency and the role of shell companies in that. Can you tell us a little bit about what makes these vehicles so useful and give us some examples?
Yeah, sure, Matt. I mean, put simply, I'd call them the money launderers' getaway vehicle of choice. You know, they pop up everywhere. If you look in any decent financial criminal's toolbox, you will find a whole network of shell companies. But without being trite, they're really useful to money launderers and other financial criminals in, I think, two unique ways. Firstly, it's that ability to obfuscate your source of wealth and to remove the beneficial ownership information and move that distance between, which is what all money launderers are looking to do, place some distance between the criminal act in themselves and the actual proceeds, which is at the heart of really what money laundering is. So they really allow people to fly below that compliance radar and make it very, very difficult for the people watching this session today to do their jobs. That's simply what they do. But as if to add insult to injury, they're useful in another way. When someone finally does unearth that crime, these networks of shell companies, often anonymously owned in the secrecy jurisdictions we're all familiar with, it makes it very, very difficult for Mark and his former colleagues to go and trace that network of funds throughout the globe. And it makes it really, really difficult to prove the case, to prove who is behind some of these networks of companies, and often leads to a dead end. So I think that's really at the heart of the art. The anonymity is really attractive, and then the ability to really impact law enforcement when that crime comes into the fore, and that obfuscation of the source of wealth, they make them very, very attractive to the types of people we are concerned about in the financial crime space. So you're politically exposed persons trying to move corruption proceeds, those trying to bust sanctions and evade detection through, again, all those people working really hard at the coalface will be watching today. And, honestly, my prep for this session, Matt, it was really, really hard to pick one case as a good example, but I found one pretty close to home, and it was the source of a RUSI investigation by colleagues looking into sanctions busting around DPRK in North Korea. And it's a really good example. They found a Togolese flagship, which was moving coal from North Korea in breach of sanctions. And guess where that ship was owned? Yes, you guessed it. It was a British shell company that was anonymously owned or opaquely owned that could not be traced back to a real live beneficial owner. So if we go into that definition of a shell company of an ownership structure that just simply doesn't make sense, I mean, I think that was the best example I could find personally.
That's fascinating. And again, I hanged my head in shame as a Brit sat here in the UK about these sort of things, because wherever you are in the world, it seems that British shell companies and British corporate structures keep popping up. But that's a very interesting case. And if you want to read about it, please do look at the RUSI report. I'm interested again into how we actually find these and how we detect them. And, from the perspective of somebody who's the head of a financial crime unit in a bank, Rashmi, what are the things that you're looking for? I mean, Helena mentioned the smell test, and I remember that from when I used to work in banking. You'd kind of get an intuition that something wasn't quite right, but you've got to have more than that, of course, because if you're talking to regulators or you're going to take action or whatever it might be, you've got to have an audit trail of what you've done. So what are the kind of, what's the kind of things that you look for? What kind of data do you use? How do you approach the problem?
So as Helena said, but shell companies, right, it's typically a network. There's a combination of shell companies and front companies that are used by professional money laundering networks. So my advice to whoever's watching this is when you identify a suspected shell company, don't just stop there. It's very important to adopt what I call point of entry approach when you're investigating shell companies. And when you identify what's a point of entry, a point of entry is basically the very first suspected shell company or front company that comes to notice, and it could come to light from your KYC program or transaction monitoring. So however you identify, it's that first company that you come across. And there's always a spectrum of a degree of confidence. You could have a very high degree of confidence that it's a shell company, for example, with where a company's accounts were used to move money relating to BEC fraud. So there you have a confirmation from your customer that it's a fraud took place, and the proceeds of that fraud were moved through the accounts of a particular company. So in that instance, you'd have a very high degree of confidence that that's either a shell or a front company. And once you identify your point of entry, then it's important to start peeling back the layers and connecting the dots. And how do you do that? You look at the connected parties, so treat that company as a hub, and then you look at the beneficial owners, the controlling parties of that company, look at the company's address, look at other identifying details of that company, including their phone numbers, etc. Then you look through your database to see who else shares the same address or the same phone number or the same controlling parties, or someone who is frequently trading with that suspected shell company. And you could, I had a really interesting case where we were able to use IP addresses where nothing else matched. They were very clever in how they had set up the network of companies, but the person who was behind those companies was moving funds across the different accounts of the network from the same laptop. So we could use IP address to track a connection between companies that were otherwise unrelated. So once you have that, then you have your next set of companies where you have a higher degree of confidence that they are shelled, and you use that as a hub, then you start pivoting around that. And I have many examples where once you take this approach, surprisingly, you come across dozens of companies in your portfolio that are part of a professional money laundering network. So it's not sufficient to just spot one, exit, and close the investigation and move on. You really need to. This is the approach I just described. It's very resource intensive. It's not something that you can afford to do for every single investigation. So you need to have a risk-based approach where, again, if it looks like there's a large amount of money moving through, and you suspect that there could be a larger network behind it, and if you have a big portfolio of SME type customers, it's definitely worth your while to take this approach where you can really identify the entire network.
That makes a lot of sense. I mean, I have some background in this in my own experience in working in a big bank, and I know exactly what you mean. It's like subatomic particles that you get inside one particle and you suddenly find there's lots of others. And then you get inside another and there's lots of others, and you feel like you're going down many, many layers, and you suddenly realize the complexity of what you're dealing with. From your perspective, Mark, I mean, this is something that I would imagine that you look at a little bit in your area of expertise. It's something that you look at have looked at from the public sector point of view, looking at from the private sector point of view. I'm interested in, what your take on what Rashmi said, and also we're not just talking about corporate structures here. One of the questions that I think, if I didn't mention it, I should have done at the beginning, is around the role of professional enablers in this and how they play into it. So, a bit of a dual question there, sort of how would you approach looking at these sort of structures, and then also who else should we be concerned about when we're looking at potentially risky shell companies?
Yeah, as you quite rightly said, all of us really, you end up falling into a rabbit hole, and I've been guilty of it myself, of kind of delving into these things, and then all of a sudden there's an explosion of everything everywhere. That's mostly due to the professional enabler side of it, and I'll come on to that answer in a moment. What I would posit, though, to a lot of individuals and a lot of professionals that are out there is, how do you set a company up? Have you ever set a company up? Do you know either what your responsibilities, liabilities, or reclaim is on VAT/GST? Do you know what documents to submit? Have you ever ran a business? And I think that's the key. It's the understanding and having experienced voices from the business community educate, or even from the professional enablement community, educate professionals within the financial crime sector or within the law enforcement sector. I don't know many, I'm one of the rarities, many former law enforcement officers that have set their own companies up, that understand the nuances of what you have to do and what it looks like when it is a legitimate structure. Yes, we can all say that's a shell company, that looks very dodgy, doesn't it? You know, with our gut instinct. But is it? Is it within that sector? Is it within that country when we go on to international formations? And is it within the culture that that's working? And I repeat this time after time after time. It depends on the jurisdiction that you're in. It depends on the law that you're dealing with, and it depends on that culture base that it's been built from. And that's now, you know, you asked a question earlier on in relation to the international picture. We all talk about very generically AML and fraud and theft and drugs. It differs wholeheartedly from country to country. And I think that's where people need to focus, where organizations that are either training or certifying or ensure that there's competitive value within the organization, they need to start implementing these training programs and procedures on a national, regional, and international footing, so that people understand what jurisdiction they're in, first and foremost. So, you know, that weaves into it. Professional enablers, I've dealt with at length. I've dealt with thousands and thousands and thousands of companies set up just by a group of professional enablers who used every structure and every part of criminal recidivism to launder money through on a 24-hour cyclic system around the globe. And that organization, there was, and we're talking about the shell game here, and to a lot of them, so accountants, lawyers, judges, and bankers, and all these enablers, and I still like to use the term professional enablers, although there's different kinds to it at the moment. There was a gentleman that I was listening to, doing some more covert work, some proper police work, if you will. And his phrase, he was being asked a question by one of his lackeys, and he said, "Well, why don't you stop now? You've got enough money. You're a multi-billionaire. What's the point?" And he just turned around and said, "Well, I do it for fun. It's a game to me. It's a laugh. You know, how many regulatory bodies are going to understand what I do? How am I going to get through the court system? I'll serve a very small sentence. I'll be back out again very soon. I'll be in a week prison." That type of thing.
I mean, in many ways, I mean, the way you describe it there, I think to myself, my goodness me, I'm in the wrong profession, because it's very it's very rare for me to say I do it because it's fun. Anyway, I mean, that's kind of very interesting context. I mean, as we move on, because we've only got a relatively limited session, I'm interested in thinking about what do we do about this? The answer that's being, sort of usually touted by politicians is about beneficial ownership, transparency, registries, also to a certain extent better use of data in the private sector. I'll probably ask, I think, both Rashmi and maybe Helena about this as well, because I know she's got an interest in beneficial ownership. Rashmi, first and foremost, when you look at these kind of initiatives to kind of create these registries, to what extent do you think that they're really helping? Or is it still something that you feel that the private sector is being left to manage on its own?
I'd say, so understandably, there is a lot of focus on beneficial ownership and creation of beneficial ownership registries, because concealing the actual beneficial owner of these companies, it's critical to the success of the money laundering scheme. And in the last few years, there's been a tremendous amount of progress, at least on paper, where with the EU Fifth Money Laundering Directive, all member jurisdictions are required to implement public beneficial ownership registries. And the UK, for all the shortcomings, it passed an amendment that requires the British overseas territories, and this includes the likes of Cayman Islands, to have public beneficial ownership registries, though it doesn't apply to Crown territories, from what I understand. So it's not complete, but all these are big steps in the right direction. And there's a paper that's published by the Tax Justice Network, which they periodically publish an update on the state of BO registries in different jurisdictions. And in the 2020 report that they published, is very good news that there were 80 over countries that had some form of law requiring registration of beneficial ownership versus 30 plus countries just a few years back. So that's a huge improvement. And all of this is very good news, right? And the Corporate Transparency Act in the US that was passed and generated all sorts of sensational headlines about how this is the end times for shell companies. It all looks very promising, but the devil's in the details, and that's because of what's actually happening with these BO registries. There are exemptions. There are different types of exemptions that vary location to location. The definition of a beneficial owner it's very different country to country. The thresholds that they use is different. The requirement to identify a legal owner, which is typically what you'd get from your corporate registry, versus beneficial owner, that again is different. We don't have a consistent view of both. And more importantly, there is no clear requirement in many jurisdictions to update the information, to refresh the information. So while in theory there are laws in place across most jurisdictions, I don't think it is necessarily effective. And from the good news for the UK, since we've been bashing up the UK a bit here, is that, at least according to the report from the Tax Justice Network, the UK ranks at the top of the work done in this space. They've assessed the effectiveness using a number of different parameters, and the UK and Denmark rank at the top. So a lot of steps in the right direction, but there's still a lot more to do.
I mean, it does make a nice change for the UK to be at the top of a league table for something, even if it's not always a good thing. Helena, I mean, you've done a lot of work on beneficial ownership and transparency, and I'll also bridge over to the issue of regulation and supervision as well, because we touched already with Mark on the issue of professional labours. We're talking, sort of another area which we discuss is the role that better supervision can play of those enablers to kind of make sure that we don't have dodgy corporate service providers sort of setting up multiple shell companies which can be used for all sorts of nefarious purposes. So again, dual question in some ways, what's your view of how we're doing with transparency? And at the same time, what about issues around supervision and regulation of those enablers who are helping these structures develop?
Yes, thanks, Matt. And yeah, without wishing to trash the UK again as a UK national, but I think, we do rank top in terms of transparency. We've really been leading the way. We have great open access to our data. It's regularly run through the civil society ringer in the UK to find out where it's weak. But I mean, I guess my argument, and it's perhaps a controversial one, is transparency isn't all that. Yes, it does have a deterrent effect, but we have the most, as Rashmi points out, the most transparent corporate registry in the world, and it hasn't got rid of the problem. That hasn't got rid of this problem of multiple shell companies being set up in the UK. And I think that goes to the heart of transparency to what end? It's only useful, that data, if it's policed, and the UK corporate registry certainly isn't. So if it's a warning to go out to anyone on this call, if you're using UK corporate registry data, a lot of that data is trash. And that's led into a debate in the UK and some future reforms around ID checking. You can literally register Mickey Mouse at Disneyland and nobody's going to check that on the UK registry, which is transparent, but it's transparent trash. So I think we need to move For me, slightly beyond transparency as being the be-all and end-all of sorting out shell companies, and move into more of a transparency plus argument. I realise we're pushing very hard to be a gold standard here, but we really need that data to be transparent and reliable. And that's very much doable in the age of digital ID that we're all moving towards globally. So I'm going to park that point here and then stop trashing my own corporate registry in the UK. But onto your point, Matt, about professional enablers, yeah, they're absolutely key in all of this. And in the whole AML financial crime space, we frequently focus on the role of banks. There's a lot of bank bashing, and the regulatory side, AML supervision, tends to fall quite heavily there. And again, in FATF evaluations, it tends to fall very heavily towards financial regulation. And perhaps with due weight that they are a key conduit for funds. However, that often leads to neglect of some of the DNFBP sectors, the non-financial areas of AML supervision. And I'd say lowest down that tree is trust and company service providers. They're either often the weakest in terms of AML supervision, or they're not regulated at all, which is not good enough. And they are the entry point. You know, if we fundamentally look at what the AML regime is and how it works, it relies very much on the private sector to be both a gatekeeper and an eyes and ears on the ground. And if you're not policing that first line of defence, then the entire AML regime arguably falls down. So in terms of TCSP supervision, it needs to be a lot harder and a lot more visible. Sure, there's a role for guidance in the AML supervisory mix, but we're really not seeing those kind of business busting fines that we see in the banking sector against some of these big trust and company service providers.
Can I just add something, Matthew? Is that okay?
Please do, Mark.
The majority of the professional enablers that are out there will use a pyramid scheme for their beneficial owners or their directors or their X, Y, and Z. They'll essentially push out cash to pay individuals that don't have much of an income stream or don't have an income stream at all, and get them to be the pseudo director or pseudo beneficial owner, etc., or pseudo shareholder. Doesn't matter who owns the shares; they just want to push cash back and forth through it. So one of the networks that I dealt with, they had about 4,000 or 5,000 people that were doing this. You know, beneficial ownership, as Helena has quite rightly put out a moment ago, it doesn't really mean anything. The fact is that these have been used, will be used, and continue to be used for criminal malfeasance. And maybe we should be looking in other directions. Yes, we need to deal with this and investigate it, but maybe we should be wholeheartedly focusing on the crimes and the big organised criminal networks, and see these as point leads into it as part of that evidential bundle for law enforcement and for that world, and part of the suspicious activity reports, so STRs, that are a really low bar. You know what I mean? I give a presentation at ACAMS yesterday. Suspicion is quite a low bar to get to. And we all understand that and know that. It's been discussed in the criminal courts of appeal in the UK about where suspicion sits. It's nowhere near belief. It's nowhere near reasonability. So it's, you know, if you've got an inkling, if you've got a gut feeling that company is wrong, submit it. It's not going to hurt anybody. Yes, some way down the line you've got to justify your decision, but that's where case systems and case management and decision making comes in.
Yeah, and thank you for intervening, because actually I was going to go on to ask you exactly the same question. So we were following the same train of thought. We've only got 5 minutes left, and I don't think we've had any audience questions. So what I'd like to do is kind of do a sort of more sort of medium-term view from all three of you before we close up. And this is a question about, you know, we're talking about shell companies now. There's a lot of concern about shell companies now. You know, how likely is it, to your mind, that we're going to be having the same conversation in 3 to 5 years' time? Is this something that is just not going to go away, or is it sort of an issue of the moment for us? I mean, Rashmi, you know, sort of when you look at, there's a lot of stuff happening in region. You know, I mentioned before MAS putting out guidance on this, and I think Hong Kong HKMA have put out previous guidance on looking for high risk shell companies. Do you think this is sort of an issue that is being effectively tackled, particularly in your region, or do you think it's just something that's we're going to see running further as the years go by?
3 to 5 years time, for sure, we're going to be talking about this. This is not going anywhere. I would say, there's a especially speaking as someone who's working in Singapore, there's always a balance, right? So the balance in this case is between ease of business versus combating financial crimes or tax evasion. Setting up very effective BO registration and verification processes, it requires paperwork, it requires time, and that directly impacts your ease of doing business. And Singapore prides itself on as being a place where I think they're always top in the index of easiest places to do business. And I think last year they fell, I think, 2 spots. So in the post-COVID world, it really depends on what trumps, whether you want to, whether the greater focus of the government is in driving the economy, in attracting new businesses, and make it easy for companies to set themselves up in jurisdictions like Singapore, versus the other dynamic that's playing out right now with the G20 nations endorsing a common minimum corporate tax, right? So if that goes through, the whole concept of tax benefit from incorporating these offshore jurisdictions, that sort of diminishes. I won't say it entirely, it goes off the table, but that consideration definitely diminishes. So then you have a clearer picture of who is incorporated where and why.
Yeah, that
so
makes sense.
I expect the picture to be clearer 3 to 5 years down the line, but nowhere near the end.
Okay, no, a pragmatic response. Helena, could you give us your 30-second thumbnail on this?
Yeah, I mean, I think it goes to, this has got to be multilateral. Any unilateral response will just push people into darker areas of the system, as we've seen. You can't clamp down in one area and expect it to go away. But I'd really put out my call for action. We need to start talking about transparency plus, and we need to start talking about a role for the corporate registries in policing the system and having a role in the anti-money laundering regime. As long as they remain outside the system and play no role in unearthing bad behaviour, we're going to continue to have this discussion in 30 years, never mind 3 to 5.
Well, I'll see you again in 30 years then. Mark, final word for you. Oh, you're on mute, Mark.
Sorry about that. Yeah, ad infinitum, essentially. It's everybody's going to need a company. Sorry. Most people that operate businesses need a company to limit their liability. So there's always going to be companies, there's always going to be shell companies, shelf companies, whatever. What I would say is that, we just heard before this session, Shay and the Global Coalition, etc. It's about international detailed analysis on professional enablers and being able to put the nodes together and focus on those guys, because those are the key latch. Not all the people opening companies and doing nicey business. The key latch is professional enablers. That's your formation agents, that's your accountants, your lawyers, your judges, etc. Your corruptive elements within it. That's where the work needs to be done. It needs to be focused in the right direction.
Well, I think those are all very focused and wise words that we should be looking at in the future. I like everything I've heard from transparency plus, clearer definitions, and also to making sure that we focus on those the right places, enablers. I could talk to you 3 all afternoon about this. This has been very interesting, and I think there's a lot more we could unpack. But thank you very much for the time you've given us today, and thank you to Regulation Asia for allowing us to do that. So thank you, everybody, and thank you to the audience too.
Thank you very much, Matthew.
Bye-bye.
It's been fantastic coordinator. Thank you.
Thank you. All right. Well, take care, everyone. Bye-bye.